Hey everyone, today is Wednesday, May 13th, 2020. Hope you guys had a great trading session. And let's take a look at the S&P E-mini, S&P 500 E-mini futures. Today we had we opened higher in the morning, and then we start going down during the day, and we made a new low. So the market is doing lower lows in the shorter term time frame right now, and with increased volume, as you can see here. So we have quite a bit of selling, quite a vertical selling here, but the selling is very what I could say organized in this case, right? You can see that it's really order selling. We have a sell, we consolidate, when sell, we consolidate. The volatility of intraday volatility is quite large. It's very different from right here, which is even more orderly of selling here. So the selling here is slower, and this thing is more voracious. So I think we should absolutely remain cautious right now. I have not opened any long positions. I have not, and what I talked about in the previous video is that I sold here, right? I already liquidated my position because I saw this potential triple top. I'm not a pattern person, but when obvious pattern shows up, I do pay attention. Okay, this was a potential triple top. When it was formed, I sold right there. I exited the market. I say goodbye to it. I have not been able to participate going back into the market because I just don't see any good opportunities for the long side. I missed out the short side because when I exit my position, I should have just start selling short. But hindsight is obvious 2020. That was a perfect short position right there, right, to reverse my trade. Hindsight is 2020. You can't catch every single move in the market. That's impossible. That's impossible. That's impossible. Like nobody can. Nobody can. You have to admit that. And you should be glad if you're able to get out at a profit at a very higher level. Then it's great. I start buying here. I start buying here. I sold here. That's all I care about. And now within like not even 2 days, within 1 day, within 24 hours, literally it's a 24-hour move, we're down to the beginning, right? The market takes the elevator down, takes the escalator up. So I should be glad that I got out. And so what do we have here? What are we going from here? I personally think that the market is in a pretty shaky ground right now. We are retesting these low points. So the market, I'm not gonna draw a trend line here because trend line doesn't work on S&P because the market. Watch my previous video about why the trend lines doesn't work on S&P 500. Is that it keeps violating against the trend line, as I mentioned before, right? You have a trend line here. You keep drawing your trend line, the market just keep going up and up. So we could have this scenario that the market, despite evaluating against your trend lines, you could keep drawing all these trend lines, doesn't matter. The market could just keep going, consolidates and going up a little bit, consolidate going up a little bit. You just don't know. So what I'm looking at this point right now is that we're at a point where if you open up a volume graph, see if I open a volume profile here. Yeah, there we go. This is a visible range. You can see that most of the volume over the last several since the low here, or maybe since this year, early this year, you can see that most of the volume is being concentrated in this area. So we are actually in an area of a very concentrated volume, buy volume. So a majority of the participants are they were buying. That's the average price, basically. The majority of participants have been clustered around this area, buying and selling. So we're back to the battle zone, what I call, between the bears and the bulls. And until we are able to establish a proper base, maybe we're gonna keep going up, or maybe we're just gonna ram through it. If we ram through and start testing this area, we have a very high potential of this market keep going down, retesting this low. However, I think that we're probably gonna hold again in this area again, and we're just gonna probably going to consolidate again, and then consolidate further, just to. What about the thing about S&P 500? You can see that it usually wears you out. What I mean is that the market, a lot of people, for example, when you were in December 2018, it drops quite a bit. And if you're a bear, you try to short the market keeps giving you these short opportunities, right? Keep giving you this short opportunity. Like, look right here. But it didn't really give any very good short opportunities. These are just really, really transcendental. These are just really transient. That's the word. And they don't really last for a long time for the bears. Like, for example, you bought a put option here, you short, and then the market just consolidates horizontally, and eventually your put option expires, and it never retests a low until we went much, much higher, or we went horizontally for such a long time. And look at this, like, this is April to October. This horizontal period is from January to October, like almost 10 months. So we can, I mean, even if you believe that the market is going to tip over, that this is a bull trap, which I do believe is a bull trap still. You don't want to hold your put options. You don't want to hold your put option. You don't want to buy any put options and hold it for long term. The best way to short a market, it would be, you just short the index, which time is on your side, right? But the thing is, your return is going to be quite minimal. The reason, because you don't have a leverage on the index, and your return, the downside could be just another 30% or 40% or even 50%. Your return is not going to be 1 times, 2 times, 3 times, like if you are holding massive amount of put options or massive amount of VIX positions. And I don't recommend you buying the VIX right now. Let me show the VIX. VIX is not, just look at the historical VIX data, okay? The chance of this move and just start doing the U shape and making a new high is just really, really low. It doesn't happen very often. You can see that all these VIX charts, that usually is the market takes the time to going horizontal, then the VIX explodes again. The market goes horizontal, then VIX explodes again. Rarely we have a V-shaped recovering VIX. A V-shaped recovering VIX did happen. It did happen back in maybe 2000, even 2007, 2008. You can see that the VIX gets beaten down by quite a bit until it has a V-shaped recovery. It gets beaten down quite a bit until it has explosion. And once it has explosion, start moving down to a certain level, it doesn't even have a recovery. It just keep going down. As you can see these behaviors. So I think we're not gonna go down right away. We're gonna have something like this, then we go up, right? Then we have a VIX recovery. Then we have another volatility event. So most likely, in my opinion, that we're going to have potentially a problem would be, we recover, it goes down again, and we probably want to fill this gap and start going horizontal. Then, so the time frame would be, somewhere near July, end of July, early August, maybe. That's when we're going to get another potential market correction, if that's your bearish scenario. And they're still 2 months away from that. or a month away from that. And if you're holding put options for the long term, you probably want to buy something far out that expires in September, October, or November-ish. And these options are fairly expensive right now, so I don't recommend you to buying them. Yeah, and that is it. So let's take a look at the NASDAQ as well. I want to see the NASDAQ. NASDAQ is still making higher high, higher low, and you can see the NASDAQ in terms of volume is much more healthier than the S&P. You can see that it hasn't really reached the majority volume buy zone right yet, and maybe tomorrow it's going to keep going down and reach that zone. But I think that zone is going to be acting as a support in this market, and the NASDAQ could be going horizontal from this point on if it doesn't go to the all-time high, as I predicted before. I still think the NASDAQ is very strong. A lot of stocks are in the hysteric, crazy level, and they could have a even further, not decline, further upside to these tech stocks. So that's my view on NASDAQ. Okay, crypto. Let's take a look at crypto. I do have a fairly significant cryptocurrency portfolio, so that's why I want to look at crypto right now. I'm adding crypto into my analysis. As you can see, the Ethereum, as you can see, this is the magic of these volume graph here. You can see that we have a lot of volume at this level, at the previous interim high. A lot of people bought here, especially people bought into cryptocurrency in general because of Bitcoin halving event, and these guys are holding the bag right now. And we came down. We probably shaken quite a lot of people out from this tiny, not a significant shakeout, but quite a bit. This is more of a like a 20% move right here, right? So we did shake out quite a lot of people. One thing that concerns me is that are we going to have something like this, right? We have a horizontal consolidation, came down, and start consolidating, and people thought the worst was over. Then we had a crash. In my opinion, I don't think we're gonna have this time. This does not look like a top to me, and I think we are consolidating. This is a real consolidation here, and just a dip, and we are probably going even higher from this point. But are we going to break the high? Are we going to break through? Are we going to, for example, one scenario would be we keep going up, break this level, and then we break that level. We may be consolidating here a little bit and keep going up and truly broken free from this large range that we've been in for the last several years. We are in this range for almost how many years? Let's see. We're in this range, in this price range, since for almost 3 years, right? 1,036 days, and that's a long time. I mean, we had a huge rally in 2018, but eventually the price came down to this zone, and we haven't been able to get out of this zone. As you can see that here, we have a lot of upward resistance. So I think the next step for the Ethereum is just to really try to get out of this zone, and I do not think this is gonna be it, that we can actually succeed, because there are a lot of people holding the back here, a lot of people holding the back still here. So I believe that we probably won't even be able to break this point, to break out from this point. We're probably just gonna consolidate again and fall back and consolidate, getting more buyers around this level. around this level as shown on the volume, and then we have more people, more strong hands getting into the market because of Ethereum 2.0, and then we start moving up to the upside. That's just my, my hope, right? It's not even a real analysis, to be honest, but just based on the market structure, I don't give this thing too much excitement at the moment. I did buy quite a bit from $130 level. This is the market cap now. Let me show you the actual Ethereum USD chart. You can see that here I got quite a bit from at $140, $130 level. I bought quite a bit of Ethereum around this level, so I'm in profit right now. But am I expecting this thing to be a 10 time in the next 2-3 months? Probably not. But I'm holding Ethereum for the long term, right? I'm holding the number 2 cryptocurrency for the long term. I'm not holding any Bitcoins at the moment because the Bitcoin, the market cap is just so big. The market capitalization for Bitcoin is so big. And if you look at the Ethereum market capitalization versus Bitcoin, you can see this. Take a look. Ethereum market capitalization is $22 billion. $22 billion on the stock market, it's even smaller than Slack, right? Slack is about $30 billion company. $22 billion is a small to medium-sized technology company right now. Large technology company have $1,000 billion, $1 trillion market cap, like Apple, Microsoft, and Amazon. So this is like a small to medium-sized technology company at $22 billion valuation. And if we look at Bitcoin market cap, the Bitcoin market cap right now is $171 billion. Again, if Bitcoin goes up 10 times, it's going to be $1.7 trillion market cap. Very, very unlikely, okay? $1.7 trillion market cap is larger than any of the tech companies on this planet. Any of the tech company valuation on this planet. Actually, $1.7 trillion market cap is probably it's going to be the largest company on this planet, the highest valued company on this planet, if it is a company. I think $1.7 trillion is even larger than the Aramco, the oil company in Saudi Arabia. So, for the Bitcoin to give you a 10-time return, you probably have to use exotic products like the options or leverage like futures. And if you have leverage, you know that Bitcoin is very volatile. I can tell you that you're not going to be making that 10 times. You are going to be wiped out before the 10 times. I guarantee you that. So forget about it. And the Ethereum has a way better chance to get to 10 times. Because Bitcoin, you can see that recently it has reached a $220 billion market cap. And Ethereum right now is at $22 billion. It's not very hard to imagine that Ethereum goes now at 10 times to reach a $220 billion market cap, which it did reach close to that back in 2018. It went to $140 billion. So, I mean, there's a high chance for this to go back to the $40 billion, or even half of that. You're going to be making 5 times, 3 times of your money, right? There's a higher profit potentials for a number 2 cryptocurrency than the number 1. Let me talk about my experience. For example, the dot-com bubble, right? The dot-com bubble, the number 1 company was a Yahoo. Yahoo has like a $500 billion market cap in 2000. $500 billion back in 2000 would be like $1.5 trillion today, if you adjust for real inflation. I'm not talking about the inflation, published by the government. I'm talking about real inflation. Look at how much housing price has gone up since 2000. Go to the valley and see how much housing price has gone up. So Yahoo back then was like a $1.5 trillion company. And if you bought a Yahoo, even at the bottom of the crash, it would be a bad deal because Yahoo basically remained the same for the next 20 years. Eventually got delisted, right? The only thing that saved Yahoo from going to zero is because it owned Alibaba shares. And same thing, right? The number one company in the previous bubble is something you want to avoid. For example, Bitcoin. In the previous bubble, in the previous 2018, 2017 bubble, Bitcoin was the number one company. If you consider this to be a company, number one investment target, right? Investment vehicle. I can say this. Anyway, Bitcoin was the number one company, similar to Yahoo. And you don't want to invest in that because it was number one. It was number one, but it's very unlikely going to be number one because everybody knows about it, right? And what happened is in dot-com bubble, if you invest in the number two company, you can be very rich. What's the number two company back in .com? Was Amazon, right? Amazon was the number two company in .com, and it turns out even if you bought at the highest level for Amazon at the .com bubble, even if you bought right here, you can see that you're still gonna come up on top after all these years. And it was interesting that you can see that most of the volume, the volume was people were accumulating shares in this range. Eventually, just exploded. That's the history of Amazon right there. You can see that. And this could be something similar to Ethereum. Let's just take a look at this again. I'm trying to find the full chart for Ethereum. Oh, there we go. You can see that most of the volume is actually in this area, in Ethereum. That just tells you that there are a lot of money that's accumulating right now. And eventually we're gonna see something like this. Hopefully. I mean, not eventually. Nothing's certain. This thing could just go to zero, of course. Everything's a speculation. And eventually, or hopefully, we can have something like Amazon in the next couple of years. By the way, cryptocurrency moves faster than equity, than actual equity. The reason is it trades 24/7, right? So the charts actually moves faster, even if they make the same patterns. So what took Amazon 10 years to realize could take this product 5 years, 3 years to realize, similar to 2017, 2018, right? That's how it works. Okay, and hope you guys enjoyed this video. And if you like this video, please thumb up, click on thumb up, and click on the like button, because that's going to tell the YouTube algorithm that you like this video and this is a great video. See you next time.